Hello everyone, welcome to a new video. Today I will be analyzing the company of SONDORS, which is expected to go public this upcoming February 13th, 2023 in the NASDAQ under the ticker symbol SODR. As always, my aim with this video will be to analyze the most relevant aspects about the company based on their SEC filing, which is available down below in the description, and afterwards, in case you're interested, you can go and you should go and do your own due diligence on it. Nevertheless, before I go into the video, let me quickly give you a short overview of the main topics that I will be covering today. First, I will start with a general introduction to the company, then we'll have a quick look at the industry and competitors, followed by the financials, then we will look at the IPO price and valuation, and finally, I will be giving my personal opinion on the company and also my future plans with it. With that said though, and after I remind you that if you enjoyed the video and all the research that I have put into it, I would very much appreciate it if you could just give it a like, but with that said, let's go for it. SONDORS is an electric mobility company that has mainly two different lines of business. On the one hand, they sell e-bikes, and on the other hand, and this is the newest line of business that they have, they sell e-motorcycles. They do this both in the US but also internationally, and they started in 2015. That's when they released the first model, their first product, which was the SONDORS X e-bike, and since then they have been selling many different models of e-bikes, and just recently, as I mentioned, they entered the e-motorcycle business with the Metacycle. That's how they call their e-motorcycle. In total, since 2015, SONDORS has already delivered over 63,000 units in 72 different countries. On e-bike models, you have an overview in the screen, with the best seller being the Fold X, a foldable bike, and then the motors range between 350 to 750 watts, and the range is until 60 miles, which is about 96.5 kilometers. Then the Metacycle is their new e-motorcycle, which has a very distinctive design and already has 10,000 pre-orders, and actually they have already started the first deliveries and shippings just recently. Personally, I really like the design as it looks very futuristic. The company is currently also designing other types of vehicles which are not yet in production. Again, they are at a very early stage, including an ATV, so an all-terrain vehicle, an electric dirt bike, a larger version of the Metacycle, amongst others. So it seems that part of the growth strategy of the brand moving forward is also to expand the current portfolio of product offerings. Additionally, the company is based in the US and has its main offices in Malibu, California. As of February this year, they had 34 employees and 16 contractors. And in terms of manufacturing, they have everything outsourced to third-party providers, which are located in China. Moving to the industry, according to a May 2022 study by Fortune Business Insights, the global e-bike market is projected to grow at a compound annual growth rate of 12.6% from $35.7 billion in 2021 to $92.2 billion in 2029. The same CAGR is also expected in the US, reaching $6.2 billion in market size by 2026. The industry is huge, but they also have lots of competitors, including companies such as Specialized, Trek, Canyon, among others, but also in the e-motorcycle space with companies like Zero Motorcycles, Energetica, Livewire, or Super 73. Unfortunately, none of the companies that I just mentioned now are publicly traded, which means that we don't have information on their financials, and actually I tried to research other bike companies and so on being publicly traded. There are some which maybe produce components for bikes, others may be traded in Europe, but none of the big ones are there, which means that we don't have access to their financials, which means that we cannot compare them to the ones of SONDORS, but still, we will be looking now at the financials of SONDORS. As I was saying, going into the financials now, we see that their performance since 2020 has been pretty good, with revenues having grown 37% between 2020 and 2021. Additionally, in the first 9 months of 2022, the revenues were already up 49% compared to the same period of 2021. Sales seem to be going well, but on the bottom line, the company is very unprofitable with substantial losses and no sign of becoming profitable anytime soon. Although, compared to other companies in expansion mode, it is not as unprofitable as I thought it could be. The gross margin in 2021 was sitting at 21%. Looking at the balance sheet, as of September 30th, 2022, they had a debt ratio of 119%, which means that the company had more debt or liabilities than assets. And after the offering though, the balance sheet will improve substantially, and they will have a debt ratio then sitting only at 61.7%, which is already more conservative, since they are expecting to have net proceeds from this offering of around $17.5 million at least. Still though, it is important to highlight that the main reason that they are going public is basically to raise cash, because if they wouldn't go public or they wouldn't raise another round of cash right now, the company would probably go bankrupt within the next year. Now moving to the IPO price and valuation, SONDOR is expecting to go public at a price range between $4 and $6 per share. And the CEO, after the offering, will own about 76% of the company, which is something that I like to see. He's super aligned with the company and he's not giving that much away, and he still retains power of the company. On shares outstanding after the offering, this is expected to be around 17.6 million, but actually it is significantly more, as the company is excluding from that, for some reason, the 3.5 million shares that they will also be issuing as part of the equity incentive plan, and also the 1.4 million shares that are due from conversion of senior secured notes. So basically it is not 17.6, you have to add these numbers that I just mentioned. And since it is something that will dilute shareholders, maybe not right now when they go public, but in a few months, I have also included it in my calculations to calculate the price to sales ratio as valuation metric, because unfortunately the company is not profitable, so it is hard to measure it on other metrics. For it, I took the 22.6 million shares that will be outstanding after the offering, the $5 of the midpoint for the price range of the IPO, and the sales. For sales, for 2021, the company should start trading at a price to sales ratio of around 6.88 times. But for 2022, I did an estimation assuming that they will maintain the 49% year-over-year growth that they had during the first 9 months into the full year, and doing that, we have a price to sales ratio of 4.61 times. As I already mentioned, I couldn't find any competitors or comparable companies to compare these valuation metrics, but personally I think that the price to sales ratio is quite realistic and not expensive at all, especially considering that during the past 2 or 3 years, many companies have been going public with zero revenues at much higher valuations, or even with companies in the EV space at price to sales ratios of 10, 20, 30 times or even more. So finding a price to sales ratio of 4.61 times with a company that seems to be growing quite consistently, and also with losses that, yes, they are significant, but not as high as some other companies that have been going public, I don't find it expensive at all. In the end though, we also need to keep in mind that we're talking about price to sales ratio, which is not indicative of the earnings that they will have. However, it is true that the company currently has around a 21% gross margin, which is something that I like to see. I mean, there are companies publicly traded with much lower gross margins, so this means that hopefully as they gain a bit more scale, they will be able to turn this into a profit, and hopefully as years go by, they will be able to reach I would say between 5 to 10% net income margin would be something I think realistic if they ever get to that point of profitability, of course. After all of this though, what are my thoughts on the company and what are my future plans with it? Personally, I won't be investing in it because I find it a bit too risky for my current investment profile, and also because I'm not an expert in the whole e-bike or bike sector, so I don't know how the competitive positioning of SONDORS is with respect to other competitors like Trek, Canyon, Specialized, or many other brands out there, so I don't feel comfortable enough investing in the company. However, looking at the numbers, I must say that they are not bad at all, and for a company with net sales annually of $20 million is not bad at all. I have seen many worse, especially analyzing IPOs. So I do think that they are on the right track, and if they continue with the growth rates and getting closer and closer to profitability, it can be a pretty good investment because the current market cap at the proposed IPO range will only be about $100 million, which means that they still have a massive runway to go if they really make this brand very successful. The valuation, as I already commented, I don't find it expensive at all. And on the other hand though, we also need to consider that during the past 2-3 years, any company that has been going public within the EV space, renewable energies and so on, has been getting a lot of attention. So we also need to see what the actual trading price will be on the first day of trading, because there might be a lot of hype around the stock. To be honest, I don't think so, because the market recently has been going down. There have been lots of retail traders that have been exiting the stock market, or at least that's my feeling. So I don't think that the IPO will get that much attention, but it's still something to be aware. Anyways, please remember that everything I share in this video is just based on my opinion, my research and my calculations, which of course could be wrong, and you should always do your own due diligence whenever investing in this or any stock. With that said though, what are your thoughts on SONDORS? Will you be investing in its IPO? Please let me know in the comments below. If you enjoyed the video, then don't forget to give it a like, subscribe to the channel if you're not yet subscribed, and as always, see you next time.